Alright traders, Adam here from Bullogic. Going over how to use trade journals. Got a request this morning about how I make my own trade journals, so that's what this video is going to be on. Now I've always felt that trade journals are the #1 tool for us traders to use to help us improve. I've always had a trade journal from the very beginnings. That's actually how I started my blog, as a trade journal. I've now moved to using Excel. If you don't have Excel, look up Google Docs or Google Drive now. They have a spreadsheet program in there that will work just the same and allow you to take your trade journal on the go, just in case you trade from various computers like I do. Now, the one thing about a trade journal is it's all about you. It's private for your eyes only, so be truthful with yourself. You want to make sure you use it to help yourself improve. So make sure you write anything that you've done wrong that you think you can fix, and also write things that you've done right. That way you make sure you can compound on it later on in the future and really make some money. Now, all trade journals are a little bit different, and you'll have to tailor yours to fit the needs that you want. But I also believe that trade journals all should have some basic information in it. For instance, we have the date, we have the underlying, we got the enter shares, that's how many shares I bought, we got the enter price, it's the price we bought at, the exit shares, that's how much we're going to exit, and the exit price. And I like to scale out of my position, so I might actually have 2 exits. And also you need the profit loss. We're going to leave 2 columns for that, one for the money and one for a percentage. You need some trade notes, that way you can figure out what you did wrong or right. And then you also, well, I like to include the chart. You really don't need a chart because you can always go back through and look. But I figure a link to a chart will make it really easy. If you need something to take a picture of your chart, I like to use Snagit. It's a real simple point and click, take a picture of the chart, copy and paste the URL right here. And that way I can just click on it and pull up the chart. It makes it easier when I need to re-look at things. So I didn't take any trades today because it was Friday and the market was gapping up higher, so I didn't really find an edge. So I'm going to use some of my trades from yesterday. My first one was in KCG. I took 2,000 shares at 353, sold 1,000 off at 369, another 1,000 at 379. A $420 profit and made 5.95% on that. My next trade was FSLR. That was 400 shares at 1757 and got out at 1745. So I took a loss on that one, which was real tragic because this one actually did end up breaking up very well, and I could have had a pretty nice gain if I would have just stayed in it. That's the way that goes, though. It'd be something for me to study later on. My next trade was Yelp. I took 300, 22.17. I sold 150 at 22.55 and another 150 at 23. Oops. Now you don't want to make these things too complicated because you still want to make sure that you're actually going to sit there and go through it. If you make them too complicated, then it's going to be too much like work, and it might be fun at the beginning, but sooner or later you're going to get tired of sitting here adding up all this information. So make sure it's simple enough that it's worthwhile, but it also has enough information that it actually helps you out. Took a quick scalp in that one for a nice gain. My last trade for the day was DF. That was actually a short at 12.04. I sold 386 and covered the last 300 at 11.68 for a $132 gain. I also like to include the total down here so I can see how I did. I don't really include commissions in my trade journal because there's just part of the game. If you lose commissions, it's not going to help you learn anything, and it's not going to help you change anything. So I like to leave that out. Besides, it just makes it a little bit more complicated. So this is a basic trade journal. I like to go back and add some notes, like KCG was a beaten down stock, and I was looking for a morning bounce. Good scale outs on this one. I was very happy with that. Now FSLR was a great setup, but I got scared and sold it too early, and it ended up running. And so you can add stuff like this. This one was a bounce off the 20 MA in a intraday chart. This was a flag break on intraday chart. And this was a bear flag with a breakdown of the 200-day moving average. So that's the kind of stuff I like to add in basically what you want to do is add in anything that you think is going to help you. Now, you start with something basic, and then as you're trading and you feel like you maybe need to understand something else, or maybe you want to see how something is, go ahead and add a column in. So one of the things I did, or you always hear when you start trading, uh, avoid the first 30 minutes. Avoid the first hour. That's when the dumb money plays. That's when you're going to lose all your money. And so I was real curious. I was like, wow, maybe that's true. Maybe I am losing all my money in the morning. Maybe I need to relax a little bit. And so what I did, I came in here and I inserted a time in. This way I can actually see when I'm getting in this thing. And I got in KCG at 8:33 in the morning. So at 8:38 in the morning, 8:57 in the morning. I'm on Central Time, so this is actually when the market opens. Yeah, it's 8:30 for me, 9:30 for everybody else. So I got these all in the market opens, especially in the morning. I make most of my money in the morning, and so this helped me see that. Now that I include a time in, I can go back and I can see, yeah, I'm actually making most of my money in the morning. It's actually in the afternoons, lunchtime, when we get those lunchtime lows and lunchtime slowness that I actually mess around and lose most of my money. It's easier for me just to trade these trades I put on in the morning, and I make most of my money that way. So that really helped me when I added this time in. You can also add things like risk reward. Maybe you think the trades that you're taking don't have a good enough risk reward, and so you can add in a risk reward. Say this was like 2 to 1, or whatever, 3 to 1. I actually did this when I was first trading and realized that I need to stop taking these low risk reward trades. They're not worth it. I'm getting a lot of my losses that way, so I need to move on to bigger risk reward trades. So that helped me out. Maybe you want to see what industry these stocks in that are trading. Maybe you think you trade a better industry than others. Maybe you trade biotechs better than materials. Maybe you need to stay away from insurance companies or financial companies. That's what trade journals do. They help you become a better trader. They help you learn what you're doing wrong and then what you're doing right. So on the weekends, Sunday is my day to get ready for the market. That's the day I look through my market. I plot, what's the market going to do? What's the best bear case? What's the best bull case? What's a neutral case? What's going to happen? I look at my charts. I get ready. I make myself a big watch list. And I also study my trade journal. I go back for that week, and I want to see, where did my big losses come in? Why do I have big losses there? What did I do? Was it me, or was it just the bad market, or a bad trade, or was it something that I did and it's something that I can fix? So I go through, I study the charts, I study my notes, I see what can I make that change. And then I also go through and I look at my big gains, like KCG, that was a big gain. Maybe I had some other big gains. What was it about those gains that made them so big? Was it an intraday play that was working for me that week? Was it maybe a flag setup on the daily charts that were working that week? Whatever I find, I'm going to make sure I do that going into next week. So, for instance, if the flag setups are working all week and that's where my money's coming in, I'm making some good money, I'm going to make sure I focus on those charts and really look for those flag setups. Maybe I'll even go out and try to find me a scan to try to find flag setups. These are the things I'm going to do to help compound my gains and make them better. Maybe I'm going to increase my risk a little bit, take on a little bit bigger position anytime I see a good flag pattern. Those are the things I'm going to do to make myself more money. This is how we use a trade journal. Not only to fix the wrong things, but also to compound the good things. Again, make the trade journal fit you. Whatever you want to add in here, add it in. Just don't make it too complicated. Now, one of the things I'm going to recommend is start slow. Start with the basics this week. Next week, add in something else that you want to check on, like the time in, maybe an industry field. Just add one of them, though. Study that for a while, learn from that, and then take that out and add something else in. That way, it's not too big. It gives you something to focus on, and you can really start to drill down. That way, it's not too big, and you can really focus on the things you need to focus on and really drill down into your trading and get a lot better. If you got any questions, shoot me an email, adam@thebullogic.com. I'd be happy to answer any questions, walk through with you on how to do trade journals even more. If you have more questions or anything else you might have, you can also leave me some comments in the YouTube video, and I will get back to you when I can. All right, everyone. Hope this helps. Take care.